Good morning and welcome to Beyond the SEAF Model. I am Jack Kosar and this is effective January 22nd, 2024. Let's get started. Our SEAF signals for this week are technology, financials, and real estate. The big takeaway here is technology. So technology is back to leading after taking a brief hiatus. The last couple of weeks, we've seen some really strong flows come into technology. I mentioned this last week. I think it was a 6-to-1 ratio from technology to the second highest flow on the trading week. In this case, this week, consumer staples is second for the trading week, and technology's flow was 5 times that of consumer staples. The only other major conviction bet in terms of the strength of the flows is energy, and in that case, it is the strength out of energy that is causing those flows. All the other flows are relatively close to each other, and I think that's kind of showing a lack of conviction in the market outside of technology and energy. And what we're seeing here is, the differentials is very, very tight, which is why we're seeing a little bit of churn in the top 5. Financials, real estate, a little bit of communication services, healthcare. They're all kind of relatively shifting around each other due to the lack of conviction in those flows. So, we're getting a little bit of, but we are starting to get a little bit of a consensus in terms of where managers are putting their money. We would like to see, those flows show a little bit of extra conviction. That conviction in those flows really works its way to the relative performance on the charts that we'll see in the rainbow charts in just a minute. Another interesting thing to note, the takeaway here is to be determined, but watching the money flow out of energy, I've mentioned before, it seems to mirror technology. As technology rises, energy seems to have that kind of mirroring effect in this chart. But to note, financials broke through and to be above energy in terms of its percentage of the pie. So, right now we have technology, healthcare, financials, and now energy. As money's been flowing out, it's not anything that financials is doing anything in particular, though we are seeing a steady increase in financials. But this strong outflow in energy is now showing up in terms of its percentage of the pie in SPY. One thing I did want to show is consumer staples. Nothing to do here yet, but going from 10 to 8 to 2, it is trending in the right direction. We're not seeing that in the relative performance yet, but we did see a similar pattern in October of last year. So we kind of tested neutral, dropped back down, and then re-entered that neutral territory and then brought into favored. We do not know if this trend is going to continue. We have to wait and see what the data tells us, as this is a very data-driven model. But as that money potentially continues to flow into consumer staples, as you can see in October of last year, we went from that avoid to neutral to favored. That gave us this nice little spurt of relative outperformance. And if we can continue this trend of inflows into consumer staples, potentially see a similar move. Moving on in our rainbow charts, technology is strong. The flows of the last couple of weeks have been extremely strong. Why is that? We'd just be speculating in a sense, but a lot of it seems to be AI driven. People are interested in this technology space. I think the whole big part of the market we saw here when we dropped down to this neutral ranking, assumed there was going to be correction. And with technology leading, we could speculate all day, but the chances, managers could be looking to take their winnings toward the end of the year. They thought there was going to be a correction. Doesn't matter. Money is flowing strongly into technology. It is sitting up at the high favored ranking, and we're seeing that in the relative performance in our rainbow chart. Real estate, and as in our top 3, sitting up in this favored ranking. We are seeing a general trend of positive outperformance. Lately, a little bit of a downturn. I think that has to do with the lack of conviction in these flows. So we're just going to continue to watch this space. Still favored, a broader trend of relative outperformance, but we just got to keep an eye on these flows and, look for a little bit more conviction from our managers. Last but not least, not to beat up on energy, but energy stays in this deep void. We had a little bit of a rebound toward the beginning of the year. That seems to have failed, and we are down into this now lower relative performance. I actually had to adjust the chart slightly so we can fit this out, but this broad relative underperformance in energy. That is all I have this week, and I look forward to speaking to you guys all next week. Thanks.